satellite image is now laid over. So FEMA's trying to get a little bit better in doing that. And as you can see in this one, the home, the very corner of the home is in the floodplain, is below the base flood elevation. So what we were able to do is do an electronic LOMA, have an elevation cert done, and then figure that out. Is it off tilted a little bit? What's going on? So that's that. So this is, in this particular property, I would have a conversation with a customer that says, hey, guys, your home appears to be in a flood zone. At that point, we're going to order through CoreLogic the flood cert to see if it is in fact in the flood zone. And then this is where we come up with, and in this particular instance, it came back that yes, it was in the flood zone. A lot of times we'll find out that it's not in the flood zone. But this is something that I like to do, this little exercise, anytime anything comes in that's on water or close to water, because we don't want it to jump out at us in the middle of the deal that the property might be in a flood zone. You know, so that's a kind of a way to protect that, and you know, on how we do that. Right? So what I do is I pull the two of them up side by side, and this is one of the newer sites. The older one, James, we had one that we did that we were looking on. I showed you how to do this last year, and it's an outline of the structures. It's a black and white satellite image. It's not a color updated one, and it's a lot harder to read. So that's that, and kind of compare the two just to make sure it's the right property, and then again you can see that this one is in the flood zone. And then if a small portion of it, you know, if a small portion of it is, then what we could do is we could, because in this instance there was a huge seawall right here, and during Irene the house didn't even get close to flooding. So we kind of knew, hey, this home isn't in a flood zone. So that's why we were able to go down that road. And I've used Irene as kind of a base measure for a lot of people. If it didn't flood in Irene, it's probably not going to flood. You know, that's kind of a good way, you know, as a recent memory to, you know, to jive to see if that's any homes that could potentially might be in a flood zone. So Jen, do you want to kind of come up and talk about the cost of flood insurance and you know, how it relates and everything else like that?
Sure. Does anyone else need a handout?
Oh.
I can hand those out for you if you'd like.
Oh, thank you. I'm going to keep one of them just so I can cheat. So again, thank you for having me here today. I really appreciate the opportunity to come and talk to you guys and hopefully educate you a little bit about what I do, which is all kinds of insurance, but today we're just doing flood insurance. Quick intro to flood insurance. Why did it happen? Where did it happen? I have the little handout here. It's not all inclusive, so you can take notes or I can embellish a little bit more on these things. The program began in 1968, which is kind of near and dear to my heart because that's when I was born. It was years ago. So it's easy for me to remember. It's a 49-year-old program. The Congress actually made an attempt to put this in place because we were having all these catastrophes and loss of life and property. So they implemented this National Flood Insurance Program where people could buy into it, and if you're in a flood zone prone area, you could get some reimbursement because your typical homeowners or property insurance isn't going to cover that. So with that, they created all these flood maps, flood zones, gave them different rates for different areas, and by the time they got a few people to buy into it, it was kind of too late because now it's underfunded. 1983, they decided to turn some of this program over to what you call write your own programs. So if you see a flood insurance policy and it says Travelers at the top, it's the same policy as you would get if it says Selective at the top or American Bankers or whatever other insurance company, because they're all underwritten by FEMA. So don't let that scare you away. If you have a different insurance carrier, it's all just a label on the, they're all underwritten by the government, so they're all the same type of policy. They're all covering the same things. And with that, they also are requiring mortgage carriers to force place this. If they're controlled by any federal regulations, they're requiring it. So our poor customers, our buyers and sellers, are kind of freaking out when their lender tells them, oh, by the way, you gotta have flood insurance. And they're like, well, no, I'm in the 100-year zone. I've never had a flood here before. Or all it is a tiny creek behind my house on Route 374. It's not even near the water. Yeah, but again, this program has been underfunded for a long, long time. The government has rezoned and remapped a lot of our areas, as you're well aware, and what happens with these is they're flood insurance rate maps. It's a firm, what they call a firm. If your property was insured with flood insurance pre-firm, you're grandfathered in with these rates that are older and cheaper. Post-firm, you get the new rates that are no longer being subsidized by the other policyholders. So if you're going to see a big jump, that's why. And what flood insurance covers, it also covers mudslide. Some people aren't aware of that, but flood coverages, flood, mudslide, there are policy maximums. So the most you can get for a residential building is $250,000, which isn't a whole heck of a lot in today's day. The max for contents is $100,000. So that covers a couple of laptops and maybe some furniture. The maximums for commercial buildings are $500,000 and $500,000. So you have a little bit more coverage, but if you've got a big warehouse or something, it's not going to touch it. You can buy excess flood if you have primary flood insurance in force. There's actual cash value, which is, I apologize for the abbreviation on your sheets. ACV is actual cash value. So that just means you're going to get depreciated on it, unless you're insuring your building to a full replacement cost value. Contents are always whatever the depreciation is. A couple of rules with the flood insurance: one building per policy. So if you've got say a motel down on the lake, and they have two buildings and they're both requiring flood insurance and you only have one policy, well, you better figure out which building it's covering because you only have coverage on one. There's no loss of use, there's no liability, it's just flood and mudslide. They do not have payment plans, so make sure that you're either making your customers aware that they have to come up with this prior to closing or factor it into closing costs. And going forward, a lot of elevation certificates are going to be required to purchase a policy. A lot of times I get into my rating system and it says, sorry, you have to have this before we'll even give you a rate. So make sure they're doing their homework ahead of time so that we can get that ordered, paid for, and submitted so we can actually get a rate so they can close.
How much is that?
I'm going to let Dean go into that because that's his area of expertise, but it is at the cost of the consumer. I don't know if that's something that can be factored into closing costs or not. That's not my familiarity, but I will let Dean explain what the costs associated with those are. So I have some rate indications for Clinton County, New York. I'll let you know that this is an anonymous building located Edgewater Estates. So if you look at Edgewater Estates, and I apologize, I don't have a fancy map like Adam does. You have one building that is actually, the front half of the building is lakefront, and it's half in the flood zone and kind of half not. So that makes the whole building in a flood zone. That rate would be for $125,000 in building coverage and $50,000 in contents would run about $8,500 a year. If you go across the parking lot and get into the next building and you have flood standard rates, that's about $1,850. So there's a huge gap in premium dollar-wise for these flood insurance policies that may or may not be in a flood zone or in a standard zone. If we can have our magic elevation certificate man make that be in a preferred zone, it drops it to $366 a year. So that's a huge difference. I'm going to let him discuss some of the ways we can fight that with LOMAs and that sort of thing. But a couple of ways. If you can elevate the building, say it's a camp, a cabin, say you can elevate it 2 feet, can make a difference of $8,000 a year. It's huge. You can relocate the building if, again, that's possible. Put it onto higher ground in some cases. And this has been a controversial piece, but I have indications from, and actually we've done one now, if you have a seller who is selling their home and it's in a flood zone and they have flood insurance, if they have had no claims history and they're willing to work with the buyer, they can transfer that policy to the buyer, which can get them those pre-firm rates as indicated before. And if you're not sure how to do that or need information on how to do that, let me know. My information's on the front. I also have cards and pens and whatever else you need. If you need me to email you information, I can certainly do that. I also gave you the handout, missing facts. I can print these up and drop them off at your doorstep if that's something that would be of interest to you or your clients. But there is one thing on the back that I just wanted to, it's the very last one. The NFIP does not cover flooding resulting from hurricanes or the overflow of rivers or tidal waters. The fact is, yes, that's why they do it. So I just wanted to end with another thank you for letting me come. And if you guys want to pick my brain, have at it. Get a hold of me. I'm happy to do another meeting or meet one-to-one. It's just to help you guys out so that you can make your transactions go. Thanks.
Hey, Jen, before you go, could you dive a little bit deeper into that transfer?
Yeah.
Because I was totally unaware of that, and with the cost of flood insurance being so high, that could be huge in the savings to the customer.
Yes. The example that I can give you is we have a client he's just off Lakeshore Road. He's selling his home to a buyer who's out of the area. The buyer was referred to my office to get a quote for flood insurance, and being that we didn't realize that this was the same property that we're already currently insuring somewhere, we did the quote. Part of his rate was a little higher because it was not going to be his primary residence, so being a secondary or seasonal home, but it came in 5 figures. It was $10,000 and change for the same policy.
Through the review process. So what we do now is, as long as there's a request to prepare an application for a letters of map amendment, we do the extra paperwork just so there isn't a return. Learn our lesson once on that. I mean, it's not worth it. It's not worth to take that time and lose 2 to 3 weeks of waiting for closing. It takes me probably an hour, 2 hours to complete the paperwork. Okay. So you'll find that there are multiple pages in the LOMA process, but it does involve not only what you see here for the forms, but it also involves preparing other documents. For example, depending on whether it's just a structure being removed or if it's part of the property being removed. If it's just a structure, we still have to determine what the elevations are adjoining the house and on part of the property. We have to show that information as it surrounds the property on a map that we submit to FEMA for review. If we're doing a LOMA to remove part of the property, which also includes a structure, we do not only a boundary survey as we would for just a structure, but we also do a topographic survey. So you have to show where the elevations are on the property. And you have to establish the lowest lot elevation that you're using to take out of the flood zone. So from that lowest lot elevation, from there upland, for example, along Lake Champlain, the base flood elevation is 102. We use 102.5 as our lowest lot elevation. And from there, we include all the property that is above that elevation. And we show that. We show the boundary lines. And then we create a parcel description for that part of the property. If you have a 2-acre parcel that is adjoining the flood zone, a quarter of an acre, half an acre is in the flood zone. We take that balance of the 2 acres that is upland, and we actually have to describe a parcel that is being proposed to be removed from the flood zone. We prepare a draft description, it's signed and sealed along with the documents, and submit that with our packet that goes to people for review. We also include tax map. We're going to map out, show where the parcel is. We have to include the firm. We create a firm act that shows where the parcel is. In addition to the property information form, the elevation form, the community acknowledgement form, and I want to touch upon this because this can be a little touchy. Recently, we were involved. Adam talked about, if you didn't flood in Irene, then chances are, and that's probably true, on moving waterways. Okay, but in Lake Champlain, the big event was in 2011, spring 2011. Okay, that's where I received calls from insurance companies saying, "Listen, we suspect that this is what's going to be happening. Can we turn to you?" I'm more than happy to answer questions. I can do the same thing for you guys if you have questions. So, as a result of 2011, one community went around and took pictures of the flooded areas, specifically the roadways and some of the properties. And so, as we were preparing 2 sites, we sent the community acknowledgement form to the representative in the town to be signed, which is acknowledgement that there was no fill brought in on this site. He refused to sign it. Okay. We came back with pictures. He provided me with pictures showing where the flooding was. Flooding wasn't on our property. We couldn't see our property from this town employee's pictures. Went back to my client, asked him, "Do you have pictures?" "Oh yeah, we have pictures." And you can see from pictures that my client taken during that 2011 event that the flooding wasn't on his property. Even when I submitted that back to the town, asking, "Would you please consider?" There's proof that we weren't flooded. No, it doesn't asylum. Okay. So I was a little worried about getting a response back from FEMA because I didn't have this form. This form was needed because that blue line that you will see on that flood insurance rate map, if it's touching the house, that will be requested. I went through that up along the Great Chazy River, where it was requested. That's what held us up, that 2 to 3 weeks. So now I include this, not like that. But it went in without this community acknowledgement form. They both went through. So that's why I'm saying sometimes they're, and I don't know if it's the same consultant that FEMA uses for all of these reviews, or if they're different consultants. So there's not always a consistent review process by these consultants. Okay? But it is possible that you can still get them through without this one form. We did it. We got 2 of them just recently. Question?
Is the certificate signable for a seller to do it ahead of time?
I'm going to touch upon that. So once this is completed and you get a response back from FEMA and you have your letters of map amendment, okay, consider this like a covenant that goes with the property. It stays with the property, okay? As far as an elevation certificate, it is my understanding if you have an elevation certificate that was completed using Bank A, now that landowner who had that mortgage is selling his property to John Doe, but John Doe is using Bank F. Bank F, my experience has been, is going to be asking for an elevation certificate. We went through this and they would not honor the previously issued elevation certificate. That's why I was surprised when Jen was talking about it could be a sign. Now, I'm not sure if that assignment was a pre-firm policy that was in place with no history, because we also went through another process where a transaction is involved where they're trying to use another previously issued elevation certificate, and the new bank wouldn't accept it. Nothing has changed. That was their argument. But we have to go out there and show some elevations and still prepare an elevation certificate. So again, I think it might be a matter of being inconsistent with the review process. So that's one thing that's important for you folks is, doing the legwork and then finding out where your property is. You can have a house that's here 2,000 feet away is where the body of water is. No problem. Well, to a consultant down in Texas who's reviewing it, this request made by the banks, doesn't matter to them. You're still touching that waterway. And it'll come back, flood insurance is requested immediately. Okay. Question?
I wonder if you could just relate very quickly, shorthand version, an elevation certificate, generalities of elevation, related to Jennifer's pamphlet, which talks about preferred flood zones, standard flood zones, and the flood zone, giving differences in rates.
Okay.
And I wonder how that relates to the elevation.
The elevation certificate is used to determine what your risks are in different zones.
Right, so let's take Lake Champlain in general, in the county. What elevation do you need to be in a standard flood zone versus?
That's something that she'll have to, all we do is collect what the existing data is. She can probably tell you what that rate is going to be. And I think it's still going to depend and vary upon what the elevation certificate will show for elevations and where you are within that flood zone. Because it determines what your risk is in each zone.
So you're not familiar with the minimums?
No.
So in other words, are those zones actually rate zones and not like a FEMA specific zone?
Yes.
Okay.
You've got an address that you're curious just to see. I don't know if anything from how to write. You know, a great working relationship, or you call me up. I got an address for you. Is it an E? Is it an X? Give me a letter, and I can do that for you. It's all I have to do is put the username and password, and I just log in and type in an address, and I can give it up front. At least an initial, what is this property initially, pulling the land in.
So generally, I don't get the feedback. Once my data goes out, 99% of the time, I don't get feedback as to what's happening. Other than when it comes to the LOMA process. As far as the elevation certificate, once my data goes out, it's gone. You know, and I just generally don't hear anything back. Unless it's a problem. Okay? Yeah.
Beforehand, going back to that elevation certificate, are there any common things to look for to say, oh, we may, besides, oh, we're changing banks or whatever, and oh, there's just a crapshoot of may have to do it. Is there something that's common that you can say, yes, expect another request for an elevation certificate, a renewal? Is there any kind of, have you seen any expirations after a certain number of years? You said pre-form, but I mean, is it a certain common that you're seeing?
What I'm seeing is when there's a change in banks, the experience has been plan on a new elevation certificate. Again, it's come down to the bank or even the insurance company. There's two different insurance companies. Whether they're all underwritten by FEMA. You know, those rates are the same. So really, why should there be a difference? You know, if one has been issued previously, why can't it just be jumping over to the new owner? I agree. It can save a pile of money. The work should not be repeated.
Don't recognize that certification.
Pardon?
So they're just not.
That we're currently writing for $866.
Oh my goodness. So if the paperwork to go through that, is that a difficult process, or is that pretty easy? I mean, is that manageable, or how does
It's manageable. It's easiest to do it with the same agent or broker who's already doing it.
Makes a lot of sense.
And if they're not aware of how to do that, or they aren't comfortable doing that, you can refer them to my office, and I can try to see how we can make that happen. Because it does make a lot of sense. And if you're talking thousands of dollars over the life of a loan or the life of your ownership of the property, this can be a deal breaker.
Yeah, very much so. Very much so. That's fantastic.
If I'm correct, it has to be done or at least arranged prior to closing.
Yes,
Yeah.
it needs to be paid for
You'd have to have
prior
an
or
insurance
at
policy
closing.
in order to get clear close.
Yeah.
And why would a seller not want to do that? Would it affect them if they wanted to get flood insurance in the future?
No,
And
not at
there's
all.
no reason that they wouldn't want to do it
There's
then?
no reason,
Okay.
and it may be even be a factor for them to get
Yeah.
asking price for their.
Yep.
So that's really good for you guys. I mean, if you're listing a house that has flood insurance around the water, asking them if they
communicate.
currently have it. And that was, when was the enforcement date, the premium switch?
The enforcement date
The
for.
enforcement from the pre-firm.
Oh,
or the
pre-firm?
post-firm?
Was pre-firm, I think it's 2012, but get ready, they're gonna rezone everything.
Yeah.
The National Flood Insurance Program, prior to this year, has had so many losses from Katrina and everything, they have gone to the US Treasury to reimburse them, and they're already backwards by 25 billion. So, going forward, you can only expect more.
Yeah.
Yeah, we've had some
Unfortunately.
floods this year, I think.
Right.
Couple, 2, 3.
Nothing
Awesome.
has to do with credit scores? This
No,
insurance?
no credit scoring, it's all based on property and elevation.
Cool, that's fantastic. Thank you so much, Jen. Appreciate
You're
you coming.
welcome.
Thank you. Dean, would you mind coming up? Everybody knows Dean, right? Dean is a great guy to know.
Great guy when the closing is set and then this issue. Believe me, it won't be the first time that we dealt with that issue. Do want to touch upon a few things that Jen was talking about, and have been involved in a few circumstances where that policy was assigned. There has been a situation where it may have been because of lack of knowledge, where involved in a situation where a policy was not assigned, we had to go through and do another certificate, elevation certificate. So, so basically, and I think because of where we are and what's happening, there still may be some unknowns out there with different levels of who's involved in this process. And there may not be sometimes some consistency of what the process should be. But obviously, getting it started and getting to the objective, getting something in place so you folks can have closure. A few things I just want to touch upon is, I was talking about what triggers the need for the flood insurance. Yes, anytime there is an application for a loan refinance that is going through a lending institution, there's going to be some research done to determine whether or not that property is in a flood zone. That's when we get the call, hey, the insurance company is selling this, we get a flood insurance. I need to know what you can do for us to either mitigate this in some way. And one of those, there's some options. First is the elevation certificate. That will dictate what the insurance premium is going to be for that property. It determines what your risk is. Now, generally, probably 90% of what we do is either along Lake Champlain or some water body that has, we call a base flood elevation, a BFE. Makes it easier for us, and it gives a good clear picture to the insurance company of what your risk is going to be. Sometimes, and we're involved in this in a few circumstances, where there is no base flood elevation established. That can make it very difficult. We try to work through that. There has been, in some circumstances, and we did 3 of these, where there was no base flood elevation. It was on a river that had a pond. And we worked with an amendment that was done on the map that was somewhat near our project site that had already established a letters of map amendment. With that is, and everybody can go on there on the same website that I was talking about, and then your map will come up. If you type in your address, that map will come up for that site location. You will also see somewhere off to the left-hand side and probably kind of to the top, you will see if there were amendments issued for that panel, okay? And if there were, it can be a plus for your site. We saw that something was issued, took advantage of that and worked with what FEMA had already established. And we're able to, through a LOMA process, we follow everything online now through the e-LOMA process, and we're able to have just the structure removed from the flood zone. Even though some of the property might be in there, we weren't out to determine whether some of the property was in or out, but we're able to show with an elevation what was established previously by FEMA and where we are relative to that we are outside of what you previously have indicated is not in the flood zone. And we're able to do that 3 times to have a structure removed. So there is a fair amount of research that has to be done to determine where you're going to be before any groundwork is done. Does it make any sense to go out there and spend a pile of money to determine, oh, you're in the flood zone, nothing can be done. So it's best to do some legwork, some research, determine what is the best route, elevation certificate or LOMA. If you don't have a base flood elevation, we're finding that we're taking a chance, submitting something to FEMA to show what the elevation difference is from the water's edge on the high point of the property, and we call the highest adjoining grade, the HAG, or the lowest adjoining grade, the LAG. And also what the elevation difference is from those 2 points to your finished floor, your crawl space, your basement, giving the information to the insurance company, and it makes them a little more comfortable knowing what those differences are. And then from there, they can determine what a risk is. LOMA. The LOMA process. The elevation certificate, I think you can have, I'm not sure, once we're done our work and we submit that back to our client and it goes to the insurance company, I think the time frame is maybe a week, okay? But with the LOMA process, that's a longer process, okay? If the elevation, the flood insurance is the last item that is to be addressed, that'll count at least 4 weeks before you get an answer, okay? Once submission is made to FEMA. Actually, it's submitted to FEMA, but FEMA contracts out with some consultants who reviews this information, okay? But it still takes us probably a week to 2 weeks. It doesn't take that long, but by the time we get the project started, you go through the process, you pull all the paperwork together, it can be a week to 2 weeks before we get our work done and make our submission to FEMA, okay? It's not just a matter of, in the package you'll find that there was an elevation certificate. I'll just step back a little bit real quick. On the elevation certificate, there's different pages that will require different information, right? And with a project right now, we thought that we could get by with just doing a section E, which we submitted, and it was rejected. Okay. So now we're coming back and we complete the entire elevation certificate, which will take more time. Right. Also in the packet, you'll find the paperwork for a LOMA submission. Basically, with a LOMA submission, and in also the elevation certificate, there is no cost to the person requesting this information to be collected for submission to a review, whether it be the insurance company or to FEMA. So when you do a LOMA, there is no cost. But when you jump to different types of LOMA, there can be a cost. But generally, everything we've done, right? There should be the second packet. They may have printed out everything in one packet. Go probably 6 pages in. Maybe 8 pages in. Okay. At the very top, you'll see property information form.
There it is. Thank you.
Okay. And again, you have the same scenario where it is desirable to have a BFE for the site. But we worked on 2 different projects where we did not have a BFE, but we had a previous application that was made, submitted, and approved by FEMA that at least to some extent established an elevation to work with. Okay, we took advantage of that, and we were able to work through and have 3 different sites removed from the floodplain. As Adam was talking earlier about pulling up these maps to get a preview as to whether or not you've got problems that you should be addressing before you get too far into your work as a realtor. If that flood zone line isn't touching the house, okay, it can still come back requesting either an elevation certificate or a LOMA. If it's touching the house, same scenario, but you may need to also provide additional documentation because of that. Again, what we found is sometimes it's the consultant who's reviewing this application that we submit or what they want to see from information. So what we've done now is, rather than wasting time, because you can add 2 to 3 weeks on to the review process. So what we do now is, as long as there's a request to prepare an application for a letters of map amendment, we do the extra paperwork just so there isn't a return. Learn our lesson once on that. I mean, it's not worth it. It's not worth to take that time and lose 2 to 3 weeks of waiting for closing. Or it takes you probably an hour, 2 hours to complete the paperwork. Okay. So you'll find that there are multiple pages in the LOMA process. But it does involve not only what you see here for the forms, but it also involves preparing other documents. For example, depending on whether it's just a structure being removed or if it's part of the property being removed. If it's just a structure, we still have to determine what the elevations are adjoining the house and on part of the property. We have to show that information as it surrounds the property on a map that we submit to FEMA for review. If we're doing a LOMA to remove part of the property, which also includes a structure, we do not only a boundary survey as we would for just a structure, but we also do a topographic survey. So you have to show where the elevations are on the property. And you have to establish the lowest lot elevation that you're using to take out of the flood zone. So from that lowest lot elevation, from there upland, for example, along Lake Champlain, the base flood elevation is 102. We use 102.5 as our lowest lot elevation. And from there, we include all the property that is above that elevation. And we show that. We show the boundary lines. And then we create a parcel description for that part of the property. If you have a 2-acre parcel that is adjoining the flood zone, a quarter of an acre, half an acre is in the flood zone. We take that balance of the 2 acres that is upland, and we actually have to describe a parcel that is being proposed to be removed from the flood zone. We prepare a draft description, it's signed and sealed along with the documents, and submit that with our packet that goes to people for review. We also include tax map. We're going to map out, show where the parcel is. We have to include the firm. We create a firm act that shows where the parcel is. In addition to the property information form, the elevation form, the community acknowledgement form, and I want to touch upon this because this can be a little touchy. Recently, we were involved. Adam talked about, if you didn't flood in Irene, then chances are, and that's probably true, on moving waterways. Okay, but in Lake Champlain, the big event was in 2011, spring 2011. Okay, that's where I received calls from insurance companies saying, hey, listen, we suspect that this is what's be happening. Can we turn to you? I'm more than happy to answer questions. I can do the same thing for you guys if you have questions. So as a result of 2011, one community went around and took pictures of the flooded areas, specifically the roadways and some of the properties. And so as we were preparing 2 sites, we sent the community acknowledgement form to the representative in the town to be signed, which is acknowledgement that there was no fill brought in on this site. He refused to sign it. Okay. We came back with pictures. He provided me with pictures showing where the flooding was. Flooding was on our property. We couldn't see our property from this town employee's pictures. Went back to my client, asked him, do you have pictures? Oh yeah, we have pictures. And you can see from pictures that my client taken during that 2011 event that the flooding wasn't on his property. Even when I submitted that back to the town, asking, would you please consider? There's proof that we weren't flooded. No, it doesn't asylum. Okay. So I was a little worried about getting a response back from FEMA because I didn't have this form. This form was needed because that blue line that you will see on that flood insurance rate map, if it's touching the house, that will be requested. I went through that up along the Great Shazy River, where it was requested. That's what held us up, like 2 to 3 weeks. So now I include this, like that. But it went in without this community acknowledgement form. They both went through. They both went through. So that's why I'm saying sometimes they're, and I don't know if it's the same consultant that FEMA uses for all of these reviews, or if they're different consultants. So there's not always a consistent review process by these consultants. Okay? But it is possible that you can still get them through without this one form. We did it. We got 2 of them just recently. Question?
Is the certificate signable? Could a seller do it ahead of time?
I'm going to touch upon that. So once this is completed and you get a response back from FEMA and you have your letters of map amendment, okay, consider this like a covenant that goes with the property. It stays with the property, okay? As far as an elevation certificate, it is my understanding if you have an elevation certificate that was completed using Bank A, now that landowner who had that mortgage is selling his property to John Doe, but John Doe is using Bank F. Bank F, my experience has been, is going to be asking for an elevation certificate. We went through this and they would not honor the previously issued elevation certificate. That's why I was surprised when Jen was talking about it could be a sign. Now, I'm not sure if that assignment was a pre-firm policy that was in place with no history, because we also went through another process where a transaction is involved where they're trying to use another previously issued elevation certificate, and the new bank wouldn't accept it. Nothing has changed. That was their argument. But we have to go out there and show some elevations and still prepare an elevation certificate. So again, I think it might be a matter of being inconsistent with the review process. So that's one thing that's important for you folks is, doing the legwork and you're finding out where your property is. You can have a house that's here, 2,000 feet away is where the body of water is. No problem. Well, to a consultant down in Texas who's reviewing it, this request made by the banks, doesn't matter to them. You're still touching that waterway. And it'll come back, flood insurance is requested and needed. Okay. Question?
I wonder if you could just relate very quickly, shorthand version, an elevation certificate, generalities of elevation, related to Jennifer's pamphlet, which talks about preferred flood zones, standard flood zones, and the flood zone. giving differences in rates.
Okay.
And I wonder how that relates to the elevation.
The elevation certificate is used to determine what your risks are in different zones.
Right, so let's take Lake Champlain in general, the county. What elevation do you need to be in a standard flood zone versus?
That's something that she'll have to, all we do is collect what the existing data is. She can probably tell you what that rate is going to be. And I think it's still going to depend and vary upon what the elevation certificate will show for elevations and where you are within that flood zone. Because it determines what your risk is in each zone.
So you're not familiar with the minimums?
No.
So in other words, are those zones actually rate zones and not like a FEMA specific zone?
Yes.
Okay.
You've got an address that you're curious just to see. I don't know if anything from how to write. Right, working relationship, or you probably have, I got an address for you. Is it an E? Is it an X? Give me a letter. And I can do that for you. It's, I have all I have to do is come up with username and password, and I just log in and type in the address, and I can give it up front, at least an initial, what is this property initially, pulling the land in. So then I can get back in line.
Generally, I don't get the feedback. Once my data goes out, 99% of the time, I don't get feedback as to what's happening. Other than when it comes to the LOMA process. As far as the elevation certificate, once my data goes out, it's gone. You know, and I just generally don't hear anything back. Unless it's a problem. Okay? Yeah.
Beforehand, going back to that elevation certificate, are there any common things to look for to say, oh, we may, besides, oh, we're changing banks or whatever, and oh, there's just a crapshoot of may have to do it. But is there something that's common that you can say, yes, expect another request for an elevation certificate, a renewal? Is there any kind of, have you seen any expirations after a certain number of years? You said pre-form, but I mean, is it a certain common that you're seeing?
What I'm seeing is when there's a change in banks, the experience has been plan on a new elevation certificate. Again, it's to come down to the bank or even the insurance company. There's two different insurance companies. Whether they're all underwritten by FEMA. You know, those rates are the same. So really, why should there be a difference? You know, if one has been issued previously, why can't it just be jumping over to the new owner? I agree. It can save a pile of money. The work should not be repeated.
Don't recognize that certification.
Pardon?
So they're just not transferring that certification.
Correct.
Just in the pipeline.
That's been our experience. Okay. And again, it comes down to some good communication with the bank and the insurance company.
Dean, just out of curiosity, because I can being familiar with the bank guidelines, I can see that coming through. But let's say you have this property 123 Main Street, and what Dean is saying is if the property had an elevation cert and then a new buyer is buying it, and a length of time has passed, I think. Rich, your question was if you were switching banks, mid-process. I think the secondary bank would take it on that. If it was the same purchase transaction, and let's say the deal died because of X, Y, Z or whatever, and you went over to that. I think the issue that most lenders are going to have is the date on that, and that most documents are only good for a certain period of time. So I would assume that would be good. My question is, let's say you had done a property in 2015, an elevation certificate on property 123 Main Street, and is your name on the elevation certificate?
Yes.
Okay, cool. So if I were to call you up and say, hey Dean, you had done an elevation certificate back in 2015 on 123 Main Street, is there any way that you could update that elevation certificate? Is that feasible? Do you have to go back out to the property? Do you have to?
Yep, and it can be updated. Obviously, it's going to involve, confirming some of the elevations that are most important, specifically those around the house. The each year, you never know when there's going to be an update on these FEMA forms. They do now ask for, they're asking now for elevations that are along a stairway leading up to the living quarters. I said living quarters, the finished floor. Okay, so we don't know if if we prepared something in 15 and here we are in 17, if there's been changes to that form, and it may need updating by doing additional field work. Okay, but some of the base work, yes, is done, so it can be upgraded, subject to doing some additional field work. Again, some of that is dependent upon what changes there were on the FEMA application, and has there been any changes to the property since that elevation certificate was done in 2015. Okay, thank you. Just to wrap up, the process can be, by the time we submit, and I've seen it as quick as 3 weeks with an ELOMA. If this is mailed, guaranteed it's at least a 6 to 8 week process before you get rid of that. To the ELOMA, we've seen it as low as 3 weeks. And the last two that came back were almost right on 4 weeks.
Now, in my experience, my limited experience compared to you regarding that, it's my understanding too that they can reject an ELOMA, is that correct?
They can.
Okay.
Again, before we even start the LOMA process, we get a feel as to where is the base flood elevation. For example, along Lake Champlain, where is 102? We generally can determine what the lake level is that day by getting online and then checking some site to see what the water level is. And from there, doing a quick check to see, hey, where's 102 going to fall? If I check, do a quick check, 102 is, I'm into the side of the house. We're not going to waste your time and money of the landowner to prepare any documents. Okay. Even if the adjoining grade is below 102, we're not even going to make that attempt. Okay. We can do an elevation certificate, which will show those elevations, but primarily, if you have a crawl space and you have no machinery, I say machinery, your well pump, your furnace, or anything that is an attribute to the function of that house is not in your crawl space and it is on the first floor, that first floor is well above or above the 102 base flood elevation, then your best route is to go with an elevation certificate. Okay. Now, costs. Base flood, the elevation certificate is the cheaper route, but you're still looking at, and again, sometimes it depends on the circumstance of the property. Your base cost can be anywhere from $1,000 to probably $1,200, $1,300, $1,400 for an elevation certificate. To do a LOMA, same scenario. Depending on the circumstances of the property, the size, how much is being removed, you can be running between $2,000 and $3,000. Okay. To give an idea of what can be involved with a piece of property that does not have a base flood elevation, prior to us making an attempt to having structure removed from the floodplain through the LOMA process, we got some costs that were associated with establishing a base flood elevation. Those costs were anywhere from $4,000 to $6,000. And even then, you don't know where the structure is or the property is relative to that newly established base flood elevation. It's a risk, because you spend that much money to do this work, you don't know where you are, you don't know if it can be removed from the flood zone. So the best thing is just doing some initial work to see where you are relative to that base flood elevation, or do some research online by looking at the firm to see has there been any amendments made on that firm that may have an impact on what you need to do. Those are some of the issues that we look at before we even start in the process. A lot of times, it's a homeowner who's calling us. They have no idea what's involved or what the associated costs are. We give them what the options are. The LOMA stays with the property. That amendment is published, goes online, you can view it. The elevation certificate. Yes, it would make sense that if something was established in 2015, it should be able to be carried forward to the next owner. Okay, and it maybe it can be with the same bank, or same bank or same insurance company. But we've also had a scenario where it wasn't. I'll stick around for a little bit.
Understanding insurance, the purpose of it is to mitigate risk. I have a question on what you do to determine elevation. When you do an elevation certificate, I sometimes hear you talking about the elevation of the land, and I sometimes hear you talking about the elevation of the floor of the building, of which the components are above. Am I correct that you're measuring both so that an insurance company can determine risk, or are you measuring one or the other?
When we do an elevation certificate, in that packet that you guys have in front of you, in the elevation certificate form, it will show you elevations of different attributes of the house that have to be located and with record what the elevation is. We establish our elevation based upon using our GPS equipment, which is coastal geodetic data, which is what these forms are all based upon. That on some of these firms, they will have benchmarks that are shown where these benchmarks are. Those benchmarks were established when this whole flood insurance rate process that started back in the late 60s. A lot of those benchmarks don't even exist anymore. So we used our GPS to establish that, which is probably more accurate than what is out there now for benchmarks that even exist. And we have to note that in the application process, what we're using for datum. And that datum has to correlate to the firms, and they do. Once we establish that, then that datum is used to record what the elevations are: the lowest lot elevation, the adjoining lowest grade elevation, the adjoining highest grade elevation against the structure, stairways feeding the structure, the finished floor of the structure, the lowest level of the structure. Maybe I should back up. The lowest level of the structure. Then the next highest grade. The lowest is basically either the crawl space or a basement. The next higher elevation, which is generally your first floor elevation, your finished floor elevation. Generally, we don't go above that. If you have components that make that structure livable, your well, or your pump, your heating system, other components of the house, it's called the mechanical. If those are in your crawl space, obviously to have an increased risk for insurance costs.
So my next question, now that I know how you measure that, is determining risk, which is perfectly logical. Maybe I'll ask a question of the insurance lady. If this information prepared, which is designed to measure risk, goes to an insurance company, and you said there are different insurance companies, I presume there are different raters. If you submit it to two different people, the same information and data then being given you, are you likely to get two different rates?
It should be exactly the same. If we put in all the same criteria, it should be exactly the same to the last dollar.
Okay. There's no reason to stop.
Right, and you find someone who you're comfortable with.
Okay.
Because it's all underwritten by FEMA.
Correct.
Right,
Correct.
it's all the same.
But we all can evaluate risk different.
And it doesn't hurt to have someone with another pair of eyes, or whether you're getting two different rates for some reason.
Gotcha.
Getting back to what the associated costs are to prepare these documents. For example, Jen was talking about what a premium was going to be versus having a transfer of a previous policy. we found that yes, we've had some clients who were paying anywhere from $4,000 to $8,000 per year for the flood insurance, and then having a LOMA done, which mitigates the insurance requirement. Now, if for some reason, something to think about, if the process isn't going to work with closing schedules, what you can do is purchase the flood insurance, okay? Then go through this process, whether it be an elevation certificate or whether it be through a LOMA. I'll just pick the LOMA process, okay? And if you get into 2 months of insurance coverage, and then the LOMA application comes back accepted, okay, you can be refunded for 10 months. So my understanding is you pay up front the year policy, okay? You can be refunded for 10 months of that, which was not covered by insurance policy, because you haven't, worked through that. Now, we have gone through the process where, I'm not sure who it was, told the owner, no, we can't get that back. Oh, yes, you can. Yes, you can.
But if they were to close in that instance, and it came back that FEMA didn't approve the application,
Then you don't get refunded.
and the client stuck with paying the
Insurance policy, right.
It's a big risk. Now, out of curiosity, when you submit a LOMA, obviously it's up to FEMA to change that, but is your success rate pretty high?
For LOMA submittals, yeah.
Yeah.
We've had 100%. But again,
Oh, wow.
I'm not going out there and just doing something to get the process started and submit something to LOMA without knowing what the elevation is out there, or having some idea what the elevation is.
Okay.
I'm not going to go through, generally, lots along Lake Champlain that we've done in Cumberland Head specifically. They've been running about $2,400, $2,600. I'm not going out there to do any field work until I visit the site and get an idea of where having something to work with. Specifically, the last two was based upon the 2011 event. Okay, landowner was telling me, yep, water never came over my seawall. And we got 4 feet yet to the adjoining grade along the house. I know we're good. I know we're good. So we're going to go forward and do the LOMA. But I'm not going to do something unless there is some indication that, we're good, we're above the base flood elevation, that LOMA, FEMA is going to accept our LOMA application.
Dean, what about the elevation certificates? Do you see those being accepted? When you submit them, do you see them being rejected on a higher percentage? Or?
Generally, once we complete, we have direct communication with FEMA for the LOMA process, but the elevation certificate, we don't. Those go to the insurance company and or the bank.
Okay.
Again, once I give it to my client, they distribute to somebody. I believe it's the insurance company who's going to look at that and say, this is where the rate goes, okay? But it doesn't go to FEMA. Whether in some way you guys keep it on file if there's ever an audit, that probably happens. Because even with these LOMAs, there can be an audit by FEMA. Okay, they will specifically tell you that in their cover letter. Okay. But again, with elevations that we use of 102.5 and above, okay, we're above. Now, different as Adam was talking about, Clinton County is pretty well mapped. There are different firms out there with different effective dates. All right, Franklin County, it is relying on very old mapping. There is no aerial photos. We do a fair amount. I say fair amount. We're doing work on Chateauguay Lake, lower and upper Chateauguay Lake, and that mapping provides very little information. Very little information. Okay. So it can be very difficult for you guys as realtors to be trying to look at information to see where you are, because when you get to Franklin County, it's not going to be as easy as it is in Franklin County. Essex County, we just haven't done any work on Essex County for their elevation certificate or the LOMA process.
I just had one up in Bloomingdale. The river has actually shifted since the map was drawn in '86. Like there was a whole oxbow that blew out in Irene, and like the part that went up by the house is so the river went like this. Now the river goes like this. Like it's not even close to the. It's actually kind of deep to see it on the maps.
And that's why when you're along rivers, some of the rivers, well, back up. There's a comment made about a little stream. Prior to 2007, we involved in prior to 2007, and FEMA's mapping, a lot of these small streams weren't even touched. Post 2007, they updated their mapping. And I noticed one little stream, literally, it's probably maybe as wide as that table. I used to fish it as a kid. And, you know, there was very little as far as water flow through that stream. Yes, it was enough to support habitat for fishing. But after the update was done in 2007, they mapped out a flood zone around this one stream. This individual, prior to the update, had built, I'll say, a catwalk over this to connect two buildings. Okay, he needed flood insurance, and we had a tough time going through the process. Persistent, dealing with them. We got through the process where somehow, and this is where I wish I'd do more follow-up, but sometimes I don't have the opportunity, where it was weight. He's probably 10 feet above this little stream. Has there been flooding through that area? Yeah, there has been through some major 125-year, 500-year events that we've had, with Irene. Okay. But so sometimes, depending on the circumstance, will dictate whether you can get through the process without having to give insurance. It's all dependent upon the bank being acceptable.
Would the bank accept that, do you know? They would.
We just need flood insurance.
You just need flood insurance, so it would be a $10,000 deductible.
Right.
Probably the premium down.
And for flood policy, the flood policy, I'm not sure as far as the mortgage, the flood policy can be either the full replacement cost of the building, up to their max, or for the loan amount. I don't know, depending on what underwriting is for mortgage carriers, if they want the whole replacement cost or not. But
our lender only cares about that. I mean, I advise people to go more than the loan amount, but the lender at the end of the day just wants to make sure that, God forbid, there's a catastrophic event, they get paid. They get paid back. So I mean, it only has to be for the loan amount, but in that instance, my goodness, you'd want a little bit more insurance.
Is there a max on the flood insurance?
For residential buildings, it's $250,000 on the structure.
Right.
Commercial buildings, $500,000. And you can buy excess over that.
Buy $1 million house.
You can only have it insured for $250,000.
$250,000, but then you want to look at authorized or excess flood. It's a separate policy.
Yes.
So in that situation, would the lender then require additional on top of that if it was only insured for $250,000?
The lender wants to make sure that the amount of money borrowed, that the insurance covers. So let's say they bought a $300,000 house and they put 10% down, and they were mortgaging $320,000. So then, in that instance, yes, they would have to use an excess coverage binder just to go above and beyond that to fully insure for the property.
Again, if there's any questions about a site, call. We can just talk and maybe give some direction. And but it's become more important, and it wouldn't be the first time, and it may not be the last time for you folks, where all of a sudden, there's a glitch, and oh wow, okay, yeah. Even if we looked at it, we didn't think there was something to be required, and just being prepared and doing some legwork and doing the research to find out, whether or not you think there's going to be an issue, or even if you're joining the program. All right.
Any other questions?
Thank you.
No, thank you.
All right, thank you. Thank you guys so much for coming here today. I truly appreciate it. It just means the world that you'll take time out of your day to come learn about these topics. This is something that we're going to continue to do every month. And calling around and talking to a lot of you guys, with the 203K presentation that we did last month, and then this one, there's been just a lot of good, great, positive feedback. So this is something that we're going to continue to do. I have in all of your packets, there's a survey in there. If you guys could just take a couple of minutes and fill that out. The second to last question on the survey is, what other things would you guys like to learn? And if you could really just take a second to think about that and fill that out, it would just truly, truly mean the world. Thanks so much. Enjoy your lunch. And
Thank you.
yeah, that's it.
Just a house that's got potential, better than farmed out. Well,
There's a beaver dam across the road. I never knew she lived in this house. The guy went to buy it. It was $2,000 plus. Then when we use the area shot, see how much where the water is.
then it made sense.
Yes.
I wonder what his name is.
But I've spoken to the house.
Made it happen before.
Process of what I'm on the property.
Partner.
That amount of property, everything's good.